Okay, hey everyone, it's Michael Valtos from Orderflows.com here, and this is the Orderflows market analysis for Wednesday, May 17, 2017. And what a day it was. The Dow was down about 1.8%, which gave it its largest daily decline in about 7 or 8 months. And really what caused it is all this Trump, Comey garbage that's going on in the media. It's like literally a war. Then, some Republicans are joining in saying, this could be an impeachable offense, blah, blah, blah. It's just a bunch of bullshit if you ask me. But really what it's doing is it's causing uncertainty in the market, uncertainty that, that this drama, as you will, this is really a drama. To me, it's more of a TV drama, but it's going to distract and slow down the Trump administration's, stimulus plans. And, with that, they're not going to be able to roll out, the things that they wanted to do this year. I think, tax, anything on the tax front will come out next year. So it's just really slowing down, what the administration was planning to do this year. And, people, S&P sold off the bonds, big rally, and dollar index suffered. It was also down again, almost not 1%, but pretty close. I think it was like 0.6 or 0.7%. And oil, we did have a draw. Again, it was, I think, 6 straight draws in the weekly oil inventories. And, we did test resistance at $49, but really, today, the main focus was in the equities markets. There were some interesting things in the bonds and the currencies in order flow, but we'll jump in with the equities. Now, again, the tools used in this presentation: the order flows trader and the delta scalper. The order flows trader is the footprint chart. Delta scalper is one of my indicators that we use for just analyzing the delta in order flow, just to sort of make it a bit easier, take a little bit off our brain. When I trade with order flow, it's really best to use your brain, not automate everything. But some things, some types of analysis can be programmed, just to sort of point it out to you. It's not saying red light, green light. Take everything in context. People say, that's a cop out. Take things in context. Well, that's what's going to separate you from the algos, is that you can put things in context. Algos don't necessarily put things in context. Everyone likes to be sort of like a robot and think, if I could take out all the emotion, take out whatever thought process out of trading, then then I'm going to be successful. No, that's not the case. Yes, there are examples of people fully automated making a lot of money in the markets, but really the best traders are the ones that use the computer that's sitting on their shoulders, their brain. And part of the reason why, traders fail is because, they sort of come in with this robotic sense, like, everything has to make sense in the market. It has to all line up perfectly. It's like coding, right? When you code something, everything has to be correct. You could miss one carriage return and it's going to throw the whole program off. It's not going to work. And, for some people, that's how they approach trading. Whereas, things don't line up. Everything lines up perfectly, but they forgot the carriage return. Oh, I can't trade anymore. I can't make money because of this one thing. Well, no, trading is not an exact science. If it was, then there'd be no markets. Everyone would have it all figured out and there'd be no money to be made in the markets. But anyway, I digress. Brief disclaimer: this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Again, that said, my results, I've been involved in the futures markets, trading the futures markets since the early 90s, mid 90s. It's over 20 years. So, my results is going to be different than someone that's been trading for a year. I'm going to see things to me that just stand out that, maybe other people can't see because they're not familiar with, reading the order flow or haven't looked at order flow long enough to really understand some of these little things. But that's why I make these videos, is to help, educate people that, don't pick it up, the first few times that they look at a chart. I just want to point things out. That's really what these videos are. That to educate people that, order flow is a great tool for trading. So S&Ps, again, it started out really early, the big sell-off during the Asian session, just, right on the reopen, just down, down, down. We did get a little bit of a bounce, coming into the European session, or not coming into, but during the European session. Then another bounce right during the cash, right before the cash open, 8:05 Chicago time. And we get this move, okay? And, there's some interesting things happening here, right after the cash open, that's cluing you that this sell-off can start to continue. Can continue rather. Honestly though, right after the cash open, we did get some buying come in here, off this low. And it was a low from 76. We did rally all the way up to 83 3/4 before the selling came back in. And what's telling is, you see this delta. The delta is 1139, 3200, 4000. But this bar here, was key in picking up that, the selling is going to continue before it sold off into the new lows. And what's so obvious about it, again, coming back down to delta, I talk about delta a lot. Why? Because it's very important. It's an important piece of information that 95% of the traders, probably more, don't even look at. Don't even, I'll say 95% probably don't even know what it is, and 98% don't even look at it. But what it tells you is the buying and selling in a bar. Max delta is the strongest. The buying was, when someone buys the offer, it's +1. If someone sells into the bid, that's a negative delta of -1. And so you have, you keep track of it. 1139 means this bar finished with a net delta of 1139. So there's more aggressive buying. Now there's never going to be more buyers than sellers. What we're going to have is more aggressive sellers or aggressive buyers. Okay. And what that means, what's an aggressive buyer? Well, someone that buys at the market, basically lifts the offer or hits the bid. That's being aggressive. If you're sitting on the bid, waiting the market to come to you, you're being passive. So, when you have a delta of 1139, means you have net aggressive buyers 1,139 over net sellers. So max delta is what the most aggressive buyers number was in the bar. So 1571. Min delta is the most aggressive sellers in the bar, 1115. And it's important to watch it. Again, you don't have to, it's not, order flow is not something you can be living and dying with every tick by, but you could sort of sit back and you could see how it's developing. And you could see here, while the headline delta number is increasing, as well as the max delta, but watch when you get up to this swing high up here off the low. So you got delta of 1139, 3271, 4528, and the delta is increasing. Then you get to this bar, it's -578. And again, if you're not looking at max delta or min delta, you're just thinking, sellers were moderately in control in this bar, but not really. If you watch the max delta, 1571, 3298, 4536, okay, 4536 and 4528, which is the final delta, that's pretty close. 3298, 3271, that's pretty close. This one, the delta 1571, 1139, yeah, it's close. It's not as close as these other twos, where you're talking about, 10 or 20 contracts, but still relatively close. But notice how it's increasing. Even from this low, it's gone from 52, 1066, 1571, 3298, 4536, and here you got 5278. So this is actually your strongest max delta in the sequence, in this rally. But something changed here. Something changed. The perception in the market that, we should be buying here for the market to be recovering and go back up has changed. And all of a sudden sellers are coming in. You end up with the bar final delta at -578. So, imagine it went from +5,000 to -578. So it went from +5,000 back down to 0. So you had sellers come in, 5,278, and then additional sellers come in to turn it negative. So this was very important to me that, this market can sell off. And then in the next bar, you got the Delta scalper giving a sell here. You got a nice strong Delta minus 7,000, but this one was key here. This bar was key, and it's just confirmed in the next bar. You do have a ratio as well, but again, maybe if you're not convinced in this bar that sellers are coming in, boom, when you see this Delta scalper kick in, turn out the lights. It's time to go to bed here. And what happens is the market sells off, get down to a new low. You sell off from the 70, the 80 area down into the 72 area. Get a little bit of a bounce. Here I thought maybe the market could maybe get a little bit of a rally. You got a nice strong Delta coming in. You got some buying coming in. Off the low, you got the Delta scalper, but it comes right back down with a bearish ratio. Point of control up near the top. Then you just go sideways, unfortunately. Make some new lows. And again, trying to pick a low on a day like today. I mean, I hate to talk about feelings in the market, but if you didn't feel that this market was coming off today, you gotta practice your emotions on the market. It's just a lot of downward pressure. It just felt that was a lot of negative news, nothing positive coming out anywhere. And selling is going to come in waves on days like that. You can see it comes down, bounces up a little bit, comes down, bounces up a little bit. Selling picks up again. Again, you got again, if you're just trying to trade divergences, you're gonna get your head handed to you. Divergence that failed. Yeah, sure, you did rally up a couple ticks, couple points here. I'm sorry, still got this cough. You did rally up a couple points. Down here, you do get the Delta scalper giving another nice buy. Did rally again from what is that, 68.5 all the way up to 73.5, and then more. But it's just one of those things. You gotta be careful. Trying to pick a low. And I'm not trying to pick lows, but if something in the order flow is telling me something that, hey, you know what, it's shifting now from a supply-driven market to a demand-driven market, then I'm going to be interested. Supply is coming in, all of a sudden demand is coming in. That's what the Delta scalper does. And it picks this low here. We do get a nice rally up. Eventually you come back down. You get all the way up here to 75. Do come back down. More negative stuff, divergence with the ratio. This one just went sideways on you. Another failed divergence into new lows later in the day. You got this new low here. This is another divergence. You've got the price rejector there giving a buy signal. It does bounce up a little bit. Again, I'll say a little bit. This is the way this market is moving. A little bit is 5 points, which is quite decent. From 61.5 all the way up to 66.5. Start working back down, going into the cash close. More selling coming in here. Again, you hit the low again, just at cash close. Got the Delta scalper giving a buy, short-lived bump up. In the evening session, we're up a bit right now, but that's today. Again, I'm not looking to buy it here and hold it all the way, going into the Asian session. So, that was it for the S&Ps. There was some interesting things. I mean, the most interesting thing, was that one early at 8:45 here that you could have sensed the market was going to go lower. Now, would you have sold it here and held it all day? Honestly, held it from 81 and took it all the way down into the 60s? Probably not. But you just, catching it here at 80, immediately down to, into the 70s, that's your day right there. You don't need to be trading the rest of the day and struggling with the market. If you could just make a quick, getting short here at 23.80, covering it down here at 73, 74, that's 6 ticks. Maybe you'd catch another trade or two later in the day. That's happy days. It's not like, oh, I got to sell this high and buy it down here and scalp this and scalp that. No. If you can take out points out of the market, right? People always, I see, a lot of people always try to scalp for ticks. 2 ticks here, 3 ticks there. Yeah, that's all well and good. But what would you rather get? You would rather get ticks or points? If you get a move early of, 6 points, 7 points, then you don't need to be dicking around, trying to get a couple ticks here, a couple ticks there. The next one I'll talk about is bonds. Bonds had a monster day, as would be expected with such a big sharp sell-off in the S&Ps. So bonds, honestly, had been going sideways for most of the European session. We did have a rally during the Asian session when S&P started tanking. Then we went sideways until about 7 o'clock. We had made a new high. We hit the highs a couple times, made a new high, sold off down into this area here at 702. Delta scalper given a buy. Got a zero print here. The zero print is this. Zero means you got a zero and then towards the bottom of the bar, which honestly to me is a bearish, bullish signal when it's on the green bar. If it was on a red bar, it'd be bearish. And then you start seeing price rejection in the next bar with, with the ratio here 303. But the delta scalper right here, 152, 02, 03, 04. You could be buying it somewhere in here in the next bar, 152, 06, 07, 05. And it just shoots straight up like a motherfucker. Look at that. Boom, 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 straight up. I was talking about this in the room. I said, really the move to, time to catch it was down here. This was before the room opened. Straight up. You hit this high up here around 8 o'clock, and you just sort of plateau. But, look at that. If you could have got in 152.05 up to where you get your first sort of negative sign, this divergence, this price rejector. Again, that's your entire day right there. People don't think that, hey, I just made 20 ticks on a trade. I'm going to keep trading. Yeah, you can. Okay, you could be walking, the famous quote from the movie Let It Ride. I'm walking around. I could be walking around lucky and not even know it. Yes, you could continue. Or, you got to make a choice. Hey, I just made some money. Yeah, you can stop. There's nothing wrong with, quitting while you're ahead. And I know sometimes people press it and they try to get fancy and then they end up plus 20 ticks early in the morning, end up the day at plus 2 ticks and give it all back. I mean, it really depends on you. That goes down to your own trading psychology. But, if you're looking for other signs, there's no sign up here necessarily to be getting short. Instead, you're seeing, all bullish ratios. Delta scalper, again, kicking off another buy. And again, it's off to the races again. You come up here from 152.30, 28.30. You hit this level up here at 06, and you just sort of bounce off a little bit. Doesn't go against you. And it just picks up again. You got the delta surge giving another buy. You got some nice buying imbalances there. It's just sort of hanging around here before it really picks up. Again, still no reason to be selling up here. You do have these divergences, but that's it. A divergence by itself to me is not necessarily enough reason to be selling it. And it just picks up again and just keeps, off to the races. Boom, boom, boom. New highs, new highs. You get up here. Okay, it's a little bit trickier. Sorry, I didn't drink something there. This bar, we got a ratio. Okay. But, be careful. Just, again, you had a move. It's almost, from 152.02 all the way up to 153.24. You get a single thing up here saying, hey, get short. You better be very selective in taking it. Like I said, you just have a monster move, and then you get something that says, possible short. Do you take it? Yeah, be careful, because we can still go higher. Point of control up near the top, but honestly, I find this bar to be a bit bearish. I do like this buying here, this imbalance, as you're going into the high. I do like that. When I say I like it as a negative sign, but it comes right back up here with, a bullish ratio and continued buying. We do make a new high here. You got a high up here, a divergence, and we do come off. But again, at this time it's 2 o'clock in the afternoon. Are you really going to get much out of a trade after 2 o'clock? Generally, no. And you just sort of drift a little bit lower. Again, I'm not saying you could have shorted this. You do have the divergence with the ratio afterwards. And it just sort of hangs around. It does go lower in the European session, but honestly, by 2 o'clock you should be done trading the bonds for the day. That's like the unofficial cash close for the bonds is 2 o'clock Chicago time, when it's 3 o'clock New York time. Now, crude oil. Crude oil was interesting. There were some interesting things in the crude this morning, which I'll go over. Where was it here? I think it was this high here. This is about 5:30 in the morning. Again, you're coming up to the high. Look, what do you got? You got decreasing delta, 786, 520, 370 at your high of the day, your strongest negative delta. Okay, you also have a ratio. You have a divergence. You have this buying imbalance up at the top, and then it's followed up with a selling imbalance on the way back down. But really, what's the takeaway is this delta. Look at this, minus 400. It's your strongest negative delta of the morning. And is that important? Yeah, it's important. It's occurring at your high of the day. So it's telling you selling is coming in at this high of the day. If you're not convinced, next bar, green, point of control, same level, still negative delta. Then this next bar, red, negative delta, point of control, lower now. So it's starting to go lower. Point of controls are going lower. And we get a little bit of a move off. Again, it's saying if you're not convinced that this is your high and you're getting short in this bar, 48, 92, 93, 94, trades down below 80. So, there's a good 15 ticks to be had there. You sort of drift around. You get up to this high here around 820. This I thought was interesting as well. You got a ratio with the divergence. You do have this buying imbalance here. To me, this just looks like someone sweeping the book and trying to trigger some stops up here near the highs. You get up to here at a high divergence and a ratio. It just sort of comes off a little bit, goes sideways before the selling comes in. But again, that's you're running up into the inventory number at 930, which, as you can see, comes out. Volume is just extremely thin at that time. Puts in a nice rally afterwards, up to what was that high? 49 something, 49.50. You get up here near the high. You have a divergence. It does come off a little bit. Test it. Get within a couple of ticks. We trade back up to this point of control from earlier. Sideways. You start getting some. You get the selling imbalance in there. We come back. We test it before coming off a little bit. You do get the delta scalper giving a buy here. We do pop up a bit, but mostly just going sideways here. There's whatever you get is sort of short-lived in this market today. Can't remember if there's anything else in here. Really, this is the price rejector that didn't work out, and it's where we are right now. I'm back down around 49 bucks. It was where we reopened. The Japanese yen. I think it was the Japanese yen. I don't know. It was strange. My euro currency chart did not work at all. Thanks to NinjaTrader, I couldn't get the euro currency chart open today. But anyway, what was it? I think it was the yen. Let's see if I can find my yen chart. Yeah, yen was quite interesting as well. Yen's a decent contract. Usually, I prefer the euro currency, but the yen is also a nice contract to be trading. So here you're coming up. Boom! You get up here to this swing high. Okay, well earlier you had the delta scalper. It just sort of went sideways on you. Didn't work out. Here you got the point of control right at the high. You got a ratio. Again, I would find that bearish, and it just comes right back on you. And goes, that would have stopped you out, but it just goes a little bit higher. Then you get up here at this high, and I thought this high was very important. Point of control right at the top. You got buying imbalance, buying imbalance. A bunch of buying imbalances at the top of the bar, selling imbalances inside. You got a ratio as well. I just found this bar to be a lot more bearish than this bar. So, while I still would have bid on this bar definitely, I'd be, biting and taking as much as I can out of it. Because, you got aggressive buyers coming into these new highs. They're looking to break it out. They're looking to come in and push the market higher. And they can't. All of a sudden, now all these people that are buying up here, what are they doing? They're realizing they can't. They got to start selling it. Now, again, this comes down to your personal preference on setting imbalance thresholds. Okay, if you just want to see every imbalance, okay, like 9 against 0, that's an imbalance of more than 400%. More of 4 to 1. Now, usually I prefer to set it at a minimum of 50, meaning there's got to be at least 50 contracts traded. So 16 against 69 would show up. 8 against 39 would not show up. On lesser traded contracts, like Japanese yen, British pound, contracts like that, I set it at 1 because I just want to see every imbalance and make my own decision. Because if you set it at 50, a lot of these imbalances, 4 against 48 will not show up. 24 against 5 will not show up. 7 against 30 will not show up. 20 against 2 will not show up. If you have it set at 50, it would just be, the 23 against 115, the 16 against 69, 29 against 129. The bigger one, anything above 50 would show up. So again, it's up to you how you want to set your imbalance volume threshold. Said on contracts that don't trade a lot, or not as much as, say bonds or 5 years or S&Ps, you're not going to have a problem setting it at 50. Very rarely do you get levels at a bar that's less than 50 contracts. But on lesser traded contracts, you might want to adjust it. But this high, you can see all these imbalances, on the way up here. But something's changed in this bar. It's still got the positive delta though. But watch how it sells off. And again, if you're not convinced that this is going to be your swing high, watch what's happening with the delta. It's getting weaker on the way up at your high. It's not negative delta. It's weak, weakening. 200, 139, 101, 47 here, 154 here. You get the delta surge kicking off a little bit off the high. And, we trade lower, all the way down to 88, 8900, excuse me. That's a move from 8920. We do get the delta scalper given a buy here, and what do? You go back up. Make new highs. So while people say, well, you only show the winning trades on the delta scalper. No, I showed you this trade here. There was a trade here. This one didn't work out. Sometimes it doesn't work out the way you like, but when it does work out, sometimes it's very beautiful. Here's a delta scalper buy. I'm talking from the 8908, 8909 level all the way up to new highs, new highs, new highs, new highs, all the way up into here, 8950. Another buy here. It's up to you if you know how to take this. You should have been long already from earlier. At this area up here, there's no reason to be getting out of the trade. Get a high up here, ratio with divergence. Really, this is your first reason to be selling, and this is around the 8970 area. 2 point of controls right at the same level as well. Watch how the next bar is going to come in. Again, if you're not convinced that this is a high, wait for the confirmation of the next bar. That's all you got to do. No one's putting a gun to your head saying, make a trade now. You have a potential high. You got a high of the day. Pick, is this you're going to sell it or not? No one's doing that. But, you could sit there and you could watch what's happening in the order flow. You see, you got point of controls right around the same level, put in some volume. Let's see how the next bar comes in. Point of control clearly lower than these 2 point of controls. That's a sign that the market can sell off a bit, and you do. You sell off from, say, again, if you're not convinced that this is your high in the next bar, you should be convinced that in the third bar, you're getting short 8965-ish area, and, it trades lower, all the way down to, below 55 before you see some supportive volume come in here. This is a doji bar with the delta scalper kicking off. Again, I'm not a fan of doji bars taking any sort of signal on dojis. Again, you get another high with the divergence and a ratio, and you get a little bit of a sell-off. Wasn't the greatest sell-off. Delta scalper gave a buy, just sort of went nowhere on you before it stopped you out. Here you got a single print for what it's worth. Do rally up. Yeah, you got a ratio. You got a 0 print here with the divergence. Didn't work out. Then you get another ratio with the divergence up here. Followed up with another ratio right afterwards, and you get a nice sell-off again from this 89 or 9,000 area, more or less, all the way down to it just sold off quite nicely down to 89.80s before circling back up towards your highs. You got a delta scalper giving a sell here. This one didn't work out. Then you get another one coming in right here a few bars later, which gave you a decent one, a decent little trade. Again, it's a delta scalper. I showed you some big moves that happened today with the delta scalper, but it's called the delta scalper for a reason. For me, it's more of a short-term trading thing than a long-term trading clue. So, but I know people that they use it, they'll trail their stops. If there's no reason to be getting out, then they won't get out. You can trail your stop however you like. So, that was basically it today. I'll say basically it. There's a lot of other markets. I've already been talking for about 30 minutes. But you're seeing a lot of things happen in the markets today. I didn't show you soybeans. I'll just show you soybeans. There really wasn't much happening in the soybeans. In all honesty, you didn't even need to look at the beans today because there's just so much other stuff happening in the other markets. Going back, 8:30 to reopen. Yeah, give it a few minutes to settle down. People are going to say, oh, you're copping out because, there's this failed, that failed. No, it's the reopen, and let the opening settle down. Give it a few minutes. I prefer 5 minutes in the soybeans for it to settle. Any market, cash open in the S&Ps. I won't take, very rarely do I take any trades in the first 5 minutes. And beans, on the reopen at 8:30, there's really no reason to be taking any trades for the first 5 minutes. But again, is there any good trading opportunities in the beans today? No, not really. Not really. We're sort of in this range for most of the day. We do make a new low here. You don't get any reason to be buying it. So that was it. Then we came in, a bit lower in the evening session. Some strong selling. A lot matched up there at 972, 800 contracts. So anyway, thanks for watching this. Again, I'll be doing a webinar Thursday afternoon at 1:45. You should come in and join. I'll put the link in the description below, and let's just listen to what I got to say. It should be interesting. But again, if you can't attend the webinar, sign up for it. At least you'll be on the distribution list for the replays when they come out. You don't need to email me saying, hey, can I get the replay? It should come out automatically, not by me, but by the company that hosts the webinar. So, sign up. The link will be below in the description. And, if you're interested in order flow in general, visit my website, orderflows.com. And I got a lot of, I haven't really posted a lot there because I do a lot of these videos. People say, oh, you're neglecting your blog, but, there's only so much time in the day. I find I can talk a lot faster than I can type. And, until I hire an assistant to transcribe everything I say and put it into a blog post, this will have to do for now. So thanks. And again, I hope to see you on my webinar tomorrow. Bye-bye.